It's Monday, May 19th, 2025. Thanks for joining me today. A lot to talk about. Anybody that thinks that these markets are not rigged and manipulated today, another example of just how rigged and manipulated they are. But before we get into all this, I was just thinking today, just the cost of everything continuing to soar. Out here in California, minimum wage is $16.50. You can go to a lot of different fast food restaurants and get $20 an hour, but it's $16.50 per hour. That's the official minimum wage here. In many states, it's a lot less. But think about if you went to lunch today, Arby's, to go have lunch at Arby's, like $20. McDonald's, I don't even know what it costs. I haven't been there in years, but I would estimate probably $15 to $20. If you want to go sit down somewhere and go to Denny's, it's going to cost you about $20. Any like sit down joint, and a lot of fast food places now, you're going to spend $20 for lunch. Think about that. You'd have to work in most places 2 hours just to go out and have lunch today. Yeah, you make $16.50 an hour times two. What is that? $32, $33. Take out taxes. And by the time you have lunch, you might have a couple bucks left over. But you basically now, no matter where you live, whatever state you live in, have got to work 2 hours just to go out to lunch. It's unbelievable what's going on. But there is going to be hell to pay. This debt is going to continue to expand. And at some point, it's going to have to be dealt with. But it is going to continue to expand at an alarming pace. And as it does, I think we're going to see a lot more inflation tick up, the standard of living in America continuing to tick down. I think the people of America better wake up and figure out and see what's going on and prepare very, very quickly. People can sit here if you want to troll, you want to be a bot, whatever you want. But look, at the end of the day, prices are going up. The cost of living is going up. The cost to live day to day is going up. People are really, really hurting. Yes, people are doom spending. Yes, people are running up credit cards. But there's a lot of people out there. There's millions of people out there working hard, paying their bills, and they are being absolutely suffocated by this inflation and the cost of living right now. Let's break it down a little bit today, what we're watching. Last night, I was watching the markets. They were getting beat up pretty good. And then today, a miracle takes place. Everything's up. S&P 500 ekes out 6 winning day as investors look past US credit downgrade. Looking past it, ignoring it. Dow Jones up 137. NASDAQ was up 4 points. Here's the problem. 10-year bond yield, 4.449 as I make this video. The 10-year bond yield continues to creep up. Bitcoin at 105,000 today. Gold was up 33, sitting at $3,242 an ounce. 30-year Treasury yield tops 5% briefly after Moody's downgrades US credit rating. Investors and markets just shake this off and ignore the danger. I don't think you should be ignoring the danger. As I said the other day, keep an eye on the 10-year bond yield and keep an eye on gold prices. Gold today having another nice day, and it's warning us that something is breaking apart. It is not that gold is going up. It's nothing that gold is really changing. It's just the dollar is getting weaker. There's more fear. There's more uncertainty. There's more chaos. There's more inflation. And everybody better wake up to the facts. These people out here in dreamland that thinks everything is okay, these are the same people who have no money put away. They have no assets. They have tons of debt. But because the television tells them we had a good day in the markets, they believe everything is okay. And a lot of these people are working 2 to 3 jobs and they're not even getting ahead. They can't even save $10. And yet they're being bamboozled that everything is okay. Let me remind everybody, if you have no money, no assets, and you're working 3 jobs, things aren't too good. Wake up. What Moody's downgrade of US credit rating means for your money, it doesn't mean anything good, I can tell you that. Borrowing costs could go up. This is going to affect everything from credit cards to car loans to mortgage rates. If you're struggling, it says right here, with sky-high interest charges, you ain't going to be seeing any relief anytime soon. people haven't seen relief in a long time. And I don't think people are going to see relief for a much, much longer time. Things are going to get worse. So my advice today is hunker down, be preparing the best that you can, get these debts paid off. If you have credit card debt, look, you're paying 25, 27, 30+%. You got to get this stuff paid off. Treasury yields go up, so mortgage rates go up. Fed fund rates go up, so do credit card rates, and so do auto loan rates. So do you think the Fed now is going to cut rates with all this going on? Now we've had a bond downgrade. Do you think the Fed is going to come in and cut rates? I don't see it happening. Now we're going from 4 or 5 cuts. Now they're talking 1 or 2. And I would be shocked to even see 1 cut this year. Maybe they'll do 1, maybe. But what's that going to do? It's going to do absolutely nothing. Ray Dalio says the risk to US Treasuries is even greater than Moody's is saying. This should alarm every one of you. Ray Dalio is no dummy. This guy's a historian, multi-billionaire. Dalio says Moody's downgrading does not take into account the risk of the federal government printing money to pay its debt. Most people out there got a lot of debt. The government has a lot more debt. Bondholders would suffer losses due to the depreciating value of the money they're getting paid, Dalio said. For those who care about the value of their money, the risk for U.S. government debt are greater than the rating agencies are conveying. That's alarming. That should wake you up. If this doesn't make you prepare, I don't know what does. The warning signs are everywhere. Today, the investors and the markets continue to ignore them. People now believe that the markets are just going to go up forever. They've never seen a crash. They've never seen a correction. And it's been so long since we've had one. And so many people weren't around for the 2008 crash, which should have been much worse. But instead, the Fed stepped in and printed trillions of dollars. They should have allowed this thing to unwind and let it go, but they didn't. So we put a Band-Aid on a gunshot wound, and here we are limping along in 2025, and now people are really feeling the pain. They're asking, what's going on? They want to blame it on tariffs. Big mistake. This isn't tariffs. This is tons of money printing. This is the Fed buying mortgage-backed securities. This was the Fed that cut mortgage rates down to 2.5% while they're buying mortgage-backed securities, buying bonds, buying God knows what. This is rates too low for too long and way too much money getting injected into the economy over many, many years. And we could go back to the health crisis and the trillions that got injected right there. And now this has just put inflation on steroids. And nobody really knows what the true inflation number really is. What's the real true CPI? Because the numbers are all manipulated. This is all rigged. Most people know that it's not whatever the rate is today, 2.8% CPI, wherever we're at, 2.5. We know it's much, much higher. It's double digits. Just go buy a loaf of bread. Go buy a pound of hamburger. Go grocery shopping. Buy anything. Go pay for a service. You know inflation is well over 2.5%. JP Morgan CEO Jamie Dimon says markets are too complacent on tariffs. Expects S&P 500 earnings growth to collapse. We have huge deficits, he says. We have what I consider almost complacent central banks. Personally, I think banks should be raising rates right now. Central banks should be raising. The US central bank, the Fed, should be raising rates right now. You all think that they can manage this? I don't think they can, Jamie Dimon says. Love him or hate him, the guy is not a dummy. Stock markets aren't properly representing the possibility of higher inflation and even stagflation. I mean, listen to these words. Inflation, stagflation, Jamie Dimon saying this. I think you got to listen a little bit about what Ray Dalio and Jamie Dimon are saying right now. I think the writing is on the wall. I think the warning signs are everywhere. We've been watching a collapse taking place for years now. A very, very slow collapse has been taking place for a number of years. Mortgage rates crossed back over 7% after US credit downgrade. This on CNBC today. The average 30-year fixed loan hit 7.04% today. Good time to buy a house? You want to buy an overpriced house now at 7.04%? Go right ahead. People tell me I should be paying full price. Oh, JB, you shouldn't be making these lowball offers. You should be paying full price. I will pay what I think the market price is, and it is not a price from 21 to 22, 2021 to 2022, the FOMO. Those days are over. Sellers better wake up, and buyers know that they're not going to be paying 21, 22 prices. The FOMO is over. Especially, look, when you were buying FOMO back in 21 and 22, rates were much, much less than half of where they're at today. Now they're 7+%. And we're still supposed to be buying a house at FOMO prices. Give me a break. Not going to happen. I will live in a tent before I give in and pay a price like this for an overpriced house and a 7.04% mortgage rate. If you do not have to buy a house today, if you can sit back and wait, I highly advise, not financial advice, but if you were my brother, sister, a good friend of mine in my circle, I would say sit back and wait it out unless you have to buy a house. Sit back. I think a lot is going to unravel over the summer. And who knows, we could see rates going much higher because we have a problem in the bond market right now. Nobody wants to talk about it. So we can ignore it, but it doesn't matter. It's a problem. And if bond yields continue to go up, it's going to be a bigger problem. So at some point, it's going to come to a point where the markets and the investors can no longer ignore it. I'm not ignoring it. You're not ignoring it. But this is a big deal. Home builder sentiment is now at the lowest level since the end of 2023. They saw a steep drop in demand in April, according to this article. Here's another one. Hell Turner radio show. China unloads more US Treasuries. Japan announces we cannot accept US tariffs. Saturday night into Sunday morning, China unloaded approximately $100 billion of US Treasury debt. You think Jerome Powell's going to cut rates? You think inflation's just going to go away? You think bond yields are going to go down? Hence, the price of US Treasuries is rising, making it more expensive for the US to finance its debt, which continues to get bigger and bigger and bigger. So I think we're going to see more of this taking place, more countries dumping US Treasuries. But if they dump the Treasuries, where are they going to go? They're going to go to gold. And this is why we saw another big move in gold today. Gold has been solid all year. And as more treasuries get dumped, countries are going to have to put that money somewhere. And they're going to go to something that is completely more solid and safer. And that's going to be physical gold, not gold paper, physical gold. These countries are buying bars of gold. I think rates are going to have to go up. And I don't see any way that the Fed can cut rates. If they did, inflation is going to absolutely run wild. I think the Fed is doing everything they can now to just do nothing and sit back. But I think at some point we could possibly see the Fed put in a position where they're going to have to raise rates. Is that a possibility? Comment down below on any of this. I want to know your thoughts on this. So many people say that these are the best comments of any channel on YouTube. I have to agree. They are absolutely incredible. They open your mind. They make you think. It makes me think. A lot of my friends, family read these comments, and you've made so many people think. You've woken up so many people. Thank you so much for writing those comments. Whether I agree with them or not, it makes us all think. And many of you had great ideas. You're reporting what's happening in your family, in your businesses, in your areas, real estate. And it's very, very constructive to all of us, because I can't really believe the data that I'm seeing on TV or the data that I'm reading most of the time. But what's the most accurate is the news coming from all of you in those comments down below. So please keep them coming. Daily Mail, Target worker exposes massive tariff price hike for popular items. Kind of scared. That's an article in the Daily Mail today. We're beginning to see the extent of price increases now with this trade war. In this article, there's a picture. It's on the. I'm going to use it probably on the thumbnail of this video. A $9.99 USB cord now $17.99. That's a pretty big increase. Are you seeing increases at the stores? If you go to a Best Buy, you go to a Target, you're going to the grocery store, are you seeing an increase in prices? Let us know. Wall Street Journal, will anyone take the factory jobs Trump wants to bring back to America? That's a good question. Will people want these factory jobs? I think it depends on what they pay. But we have a very, very lazy nation. Most people would rather stay at home and get a government subsidy, or they would rather just work from home. Most people don't want to have to get up and go to work, especially work in a factory. I don't know. I think one way it would work is if you cut people off from all the free money, because I truly believe that when people get hungry and they don't have government subsidies, and you're not giving people free food and free money, but you're giving them opportunity, and you're giving them jobs, then I think they would probably choose to go to work at a factory and make a good wage and feed themselves and feed their family. So I don't know. We do have a lazy nation. People resent work now. Many of you have gone out, to a restaurant or to a business. The service is horrible. Not every place, but it seemed, at least for a while, that people really resented having to go back to work. They didn't want to be there. The service was horrible. Maybe that's changing a little bit now that people are getting a little bit hungrier, that now the student loan debt has to be paid back, and people are going to have to figure out a way to pay it back. Maybe going and getting a job might be a good idea. But what are your thoughts on this? Would people go to the factories? I think it depends on the wages. But I think if people get hungry enough, they will do things that they thought they would never do. And I think we have to stop giving out free food to people who are able-bodied. I think these government subsidies have to come to an end. If you're able-bodied, then you should be out there working instead of just staying at home getting free stuff. I mean, think about it. If you're an able-bodied human being and you're sitting at home all day, I mean, how do you have any pride? How do you look at yourself in the mirror? I just find that really hard to digest, that people would rather just sit at home and not be constructive, productive. There's something, to at least say that when you get that paycheck at the end of the week and you cash it, you get the money and you can afford to buy stuff, that's a great feeling. But to sit at home and just have somebody take care of you like you're 5 years old, that's embarrassing, especially for a man. So don't ever become that. You may not like where you work. You may not like your boss. You may not like what you're doing, but stay where you're at. This is a chaotic time. If you're making good money, stay where you're at. It keeps you sharp, keeps you in a rhythm, keeps you disciplined. You might not like it, but things will change eventually, but it still keeps you sharp. If you're staying at home all day, living off the government dole, you're a zombie. You're not staying sharp. You have no discipline. You're not being productive. You're not being constructive, none of that. You're not sharpening your skills. So no matter what, do something. Do something and just be good at whatever you do. If it's sweeping a floor, cleaning windows, mowing lawns, cleaning pools, digging ditches, whatever it may be, do a great job. It's going to keep you sharp. It's going to keep you in shape mentally, physically. And then something better will come along and you'll be ready for it. You'll be sharp and you'll take advantage of the opportunity. So I'm going to leave it there today. Please comment down below on any of this. Again, thanks for the comments. It's making all of us really think, and we all need to be thinking right now because so much is happening, and I want to know your thoughts. Make sure to like this video, share this video all over your social media, and if you haven't subscribed, make sure to subscribe. Have a great day. Be careful out there, ladies and gentlemen. God bless every one of you. Talk to you soon.